what's up,
And we are alive. Good morning, Crypto Warriors, and welcome back to the Gentlemen of Crypto, episode 1328. And today is Friday, May 16, 2025. And I'm King, here to bridge the gap between the community and crypto. Most days, Monday through Friday at 7 a.m. ish. Today's top stories: CFTC commissioners in the news. But before I talk about them, I got to make sure I'm unmuted because I know I'm probably not. Let me see. Check. I am. There it is. CFTC commissioner will step down to become Blockchain Association CEO. SEC delays Solana ETF as decisions for Polkadot and XRP loom. 51% attack on Ethereum is more difficult than on Bitcoin, says Justin Drake. Stablecoin bill passes in Northern Marianas as House overrides veto. And decentralized rental app turns everyday items to share assets. That and much more. But first and foremost, of course, let's go ahead and take a good look at these prices. And of course, Bitcoin is continuing to pump as it has these last few days and few weeks, still at a healthy price point here. Coming in at $103,662. You see it kind of bouncing around right now as I speak, up 1.69%. Ethereum number two, $2,589, up 2.75%. They said, hey, we don't need Bitcoin anymore. The stories are already coming out. XRP at number four, $2.42, down 0.56%. Number 8, Dogecoin, 22 cents, up 2%. Cardano number 9, 78 cents, up 2.23%. And 10, Tron at 27 cents, up 0.45%. Fear and Greed Index has slipped a little bit to a 69. Bitcoin dominance at a 61.9%, and Ethereum dominance at a 9.5%. So far, so good over in the world of Ethereum after this upgrade. People are seeming to be happy with it. Really quick, let me give some shout outs to the chat. Top of the morning, Super Mario, Joe Muhammad, Saber Saves, Only Bitcoin, Lord Smith, Memories of Mike, Dearbit, Satoshi Slim, Jake. Good morning, good morning, good morning. Let's go ahead and hop into the top story this week. Once again, it's been pretty slow. Most of the stories I've seen this week have been project specific. I've seen a lot of stories trying to kind of cover in on projects, and usually that happens when there's a slow news cycle. I don't go too crazy into covering project specific stories only because most of these projects don't last that long anyway, right? So we mess around and cover a story, and within 6 to 8 months, that project will be gone. So mostly project specific, kind of some of the trending ones. Like I said, you got your scam stories in there. I saw one about a bunch of gamers who end up turning into hackers and getting caught. I'm not covering that today, but did see some scams in there, did see some rug pulls. I saw that Coinbase, Brian Armstrong, as well as some other CEOs of the big crypto companies are in DC right now trying to persuade the Senate on passing different acts and different crypto centric policies. However, there's pushback on that because a lot of the Senate and Congress right now, they say, hey, we don't want to make crypto specific guidelines if we can't carve out different guidelines for the presidential administration right now. They're not happy with the way things are looking. So again, a lot of theme specific articles. It wasn't a lot of big headlines. So these are some of the biggest ones I could find. Hilarious afros are in the house. You already know it. Top story of the day: CFTC commissioner will step down to become Blockchain Association CEO. Didn't I say there was a slippery slope with that revolving door? Well, the slope has essentially slid now. Summer Mersinger is expected to lead the commission 3 years before her term ends to lead the Blockchain Association. And for me, even though this may be a good thing as far as the Blockchain Association, it calls into question how the laws are being kind of created, who's analyzing them, and how they're being pushed forward. Because if you have somebody who can essentially have one of the top positions in the land when it comes to cryptocurrency as far as the regulatory side in the United States, and then overnight, as you can see here, be a part of the crypto side of the house, that's kind of a conflict of interest because they could easily set policies, set laws, and set other things like the bit license that are almost very difficult to obtain or follow through with that law. And then go work for a crypto company and say, I can teach you everything you need to know about these laws to get past it. When in reality, it's something you created yourself, right? You created a problem and you're bringing a solution to the other side of that problem. So Summer Mersinger, one of the 4 commissioners currently serving at the U.S. financial regulatory body, Commodities Future Trading Commission, CFTC, will become the next CEO of the digital asset advocacy group, the Blockchain Association. Then on the Blockchain Association side, I mean, are they just going to be hiring people who worked at the government? Is that all it takes? Is like, oh, you got a government regulatory job? I guess you're good enough for us. This is why I also said it was such a slippery slope to give applause and hand claps to the government when they're creating laws, right? Creating new crypto laws. You're allowed to have a private wallet. You're allowed to trade. I'm like, well, this is bad because you're allowed to do it anyway. But if you're only allowed to do it if they say so, then once they take that privilege away, then you're no longer allowed to do it, right? It works the same way. So blockchain association slippery slope, whereas like we're only going to be hiring, or we're mostly hiring regulatory, people who stood on the regulatory landscape for us on the crypto side of the house. It's going to be kind of weird because again, as they started to shape those laws, they could make laws so draconian you have no choice but to hire them. And then once again, it just starts that vicious revolving cycle. But again, the May 14th notice, the Blockchain Association said its current CEO, Christian Smith, will step down from Mercinger on May 16th, which is today, allowing an interim head of the group to work until the CFTC commissioner assumes the role on June 2nd. Though her term at the CFTC was expected to last until April of 2028, the BA said Mercinger is set to leave the agency on May 30th. I guess that money talk and that BS walk. So it looks like she served as one of the CFTC's Republican seats since 2022. It opens the way for U.S. President Trump to nominate another member to the financial regulator. That in of itself is good for us because I'm pretty sure he's going to hire a super pro crypto regulator in that position. So I think that would be a good thing for us, especially as I just mentioned, you have Congress and Senate trying to shape regulatory guidelines around specifically President Trump administration. So him having another teammate in that fight in a different regulatory position should be good for him. It says rules require that no more than 3 commissioners belong to the same political party. So it's a jump, still it's 3v1, but it looks like he'll probably get that as well. So again, not a huge story here. It's just one of those things that we've seen since the beginning of crypto now that we're going to start seeing regulators leave their positions and go over to the crypto side of the house. Usually they wait until that position is complete, finished, finito. But it looks like for the first time, we see someone stopping 3 years early to say, I am full crypto on this thing. So again, that's a shout out to the power of this marketplace. But again, it does add for some questions as far as how is the legislative process, who decides what, and how long do they have before they can just leave their position and come over to crypto. Again, what if she made some type of crazy law, bit license part 2, and then the next day quit and says, I'm going to be teaching these crypto companies how to obtain this thing. So it's kind of weird to see as well. All right, next up, SEC delays Solana ETF as decisions for Polkadot and XRP loom. Over 80% of investors are betting on the approval of a Solana and Litecoin ETF in 2025, despite the delay from the SEC. Well, we're halfway there almost. Still can happen, third quarter, whatever, late third quarter. If it doesn't happen, I can see 10 or 15 of them being allowed in 2026 once they have the landscape together as far as what they want from a regulatory point of view. But it's no surprise, right? We haven't heard a lot of talk about the ETFs. There was a lot up front at the beginning of the year. It's kind of died down. So this makes sense that they're pausing this. And I think the only reason they're pausing it is because the market would get too crazy, right? It's already whack-a-mole. They can't keep up with the trading cycle. They can't keep up with exchanges, private wallets, so on and so forth. Adding ETFs will only add more headaches and more confusion than clarity. So I think that's probably the reason why we're seeing it get paused. Will it be stopped? No, I still don't think so. You have a presidential meme coin and a presidential wife's meme coin. So why would you stop an ETF at this point? But they're definitely slowing it down to make sure that not just the regulatory side, but the business side is in place. Who's going to get the money, when, how, what type of markets are going to be moving into it, what type of portfolios. You want to make sure you have that front loaded, so when you do have the ETFs, you have these big headlines and millions of dollars and numbers and things of the sort, right? So that's one thing. They want to make sure that the business is correct. But then they also, I think, want to kind of temper the market. They don't want to do an ETF too early and it does fall flat. I think you see the market get a little bit more volatile after that. You can see people start to take profit and start saying, hey, I don't know what's going on. There's a lot going on. Let me sit on the sideline. I can see issues kind of starting to develop in the underlying market once these ETFs are launched. So again, I think everyone's just trying to slow roll it to do it the best way possible to get as much money possible within its first few weeks. And not just again for the Solana ETF or the Polkadot, there's a ton of ETFs. And once you say yes to a few of them, you have to say yes to many of them, which is probably why they're pausing all of them. But again, the SEC pushes decision on listing Grayscale's spot Solana Trust ETF on the New York Stock Exchange to October 2025. Okay, so yep, October, November, December, so the beginning of the fourth quarter, according to May 13th filing by the securities regulator. We saw Bitcoin get their ETF, I believe, in June of 2024. Excuse me, I said June, January of 2024. So if they do stick to that schedule, it could go all the way into 2026 before we see some of these ETFs. But for sure, they have officially pushed it back to the beginning of the fourth quarter. So again, the SEC also delayed its ruling on Canary Capital's Litecoin ETF, as well as a couple others that are in the mix as well. So it looks like there's a pause on these. We'll come back fourth quarter and check it out. But all the altcoin ETFs are not having the summer they thought they would. And this could also slow down the pace of the market as a whole, having its crazy summer pump as well. So continue to watch. And of course, new changes will come. We'll see. But it looks like this is going to be a fourth quarter play for a lot of these altcoin ETFs. All right. Ethereum said, listen, we got our upgrade. It's time to take a victory lap and talk smack. If you just remember, not even 2 weeks ago, Ethereum was on the cusp of forever dying and being forgotten about. Now they're coming out with headlines saying 51% attacks on Ethereum are more difficult than on Bitcoin, says Justin Drake. I saw this headline and I had to click. I said, fine, you got me. The rage bait is real. Ethereum researcher Justin Drake told Cointelegraph that launching a 51% attack on Bitcoin would be cheaper than on Ethereum, estimating it will cost around $10 billion. Well, if you're from where I'm from, you know those are fighting words. So, hey,
Fight.
listen, I don't believe it. Even if I see it, I wouldn't believe it. Here's the deal. Um, Off the top of my head, I'm assuming, excuse me, off the top of my head, I'm assuming that Justin Drake is saying that, hey, if you were to actually do a 51% attack in its rawest form where you're trying to take over half of the nodes, it will cost more on Bitcoin. I can only assume that they're saying that because each node from the proof of stake implementation that Ethereum has probably costs so much money. If you remember, somebody said the other day, you went from a node costing like $35,000 or like 350 or whatever $1,000. It's saying here it will cost $8 billion to run a successful 51% attack, and then he expects a successful attack to be virtually certain when the cost slips to 2 billion. A 51% attack occurs when a single entity or group controls over 50% of a blockchain's network, mining or staking power, gaining power over the network. And this is posed the same was it? They said Bitcoin's completely screwed because of the security budget, saying that will cost $8 billion to run there. Okay, this will become blindingly obvious over the next decade. Ethereum is the only truly decentralized crypto asset that becomes the internet's store of value. And they're saying to have 100% control of that chain or 50% control of that chain, it was what 34,168,987 stake Ether worth nearly $89.6 billion, and saying half of that will be 44.8 billion. I see what they did. They're doing mental gymnastics with the numbers, but here's the bottom line, and this is why it will cost less to actually do a 51% attack on Ethereum than it would on Bitcoin. With Ethereum, you can do a 51% attack if you do a conference. If I do an Ethereum conference, I can get enough node operators in the same room to say, hey guys, let's just flip. That's right. Me talking to an auditorium full of Ethereum maxis could possibly flip the network. You can't do that with Bitcoin. You can't get 51% of the Bitcoin operators or 51% of the network, I should say, in one room. You can't get 51% of the Bitcoin's network in an auditorium and say, hey, y'all, let's go ahead and flip the network today. You can't do it. There's people in caves, there are people on planes, there's people everywhere who have Bitcoin nodes, right? Why? Because that is proof of work. You need those nodes to actually make the network work. Whereas now with Ethereum, all you need to do is buy a node. These are wealthy individuals for the most part. A few people were early, but for the most part, right now, most of the node operators are wealthy individuals, and there's not as many nodes on the Ethereum network as you see on the Bitcoin network. So again, it sounds good in practice when you're just talking the finance part of it and not even checking the numbers. So that's if it's true, right? It sounds good on the surface. Bitcoin having a bigger market cap, I doubt that's true. But when you actually put it into practice, it's going to be almost like it's way harder to do Bitcoin's network because again, you're going to have people of different Like the demographics would be so different as far as the language demographics, cultural demographics, regional issues, language barriers. There will be so many different demographics. Whereas with Ethereum, by and large, a lot of those folks are going to look and sound the same. Ethereum maxis, right? So no, I don't think a 51% attack on Ethereum is or will be harder to do on Bitcoin. I mean, again, just 2 weeks ago, their market share slipped to about 7 point something 8%. It wouldn't be difficult to do a 51% attack on something that has only an 8%, share of the marketplace. So I disagree with this. Of course, it was perfect timing for an article like this from Ethereum maxis, especially as their price pumps because of their new upgrade. But if you know how upgrades and marketing works, this is on course. This is par for the course, not only for Ethereum, but most altcoins. I want to know what's going to happen in the next few months if and when Bitcoin decides to take another dip. Will Ethereum still stay at 2,500 plus, or will we see it respond and reduce back to what 1,800, 1,900 is as it makes more sense? We'll see. But I know one thing for sure and two things for certain. If you think Ethereum is more secure than Bitcoin, you might as well give them the rest of your capital now. Stan, thanks for the tips. As a Bitcoin maxi channel, is the channel bullish on projects like on Bitcoin like Track, Tap, and Hyperball? So Track and Tap, yes, because I've heard a little bit about. I know the some community interest in Track and Tap. Hypermall a little bit too new for me, so I couldn't say. But by and large, I would say almost everything being built on Bitcoin should be far more superior as it's taking more time, it's going through more rigorous tests, and it's on a more secure blockchain to begin with. So if that all continues on that same trajectory, I say like everything else built on is probably going to be stronger than some of the competitors out there. Ethereum has been hacked multiple times. Bitcoin hasn't. People only have been able to socially engineer hacking people wallets. Ethereum network has been hacked in 2016. So that's what I mean. Ethereum has had so many real world issues. This was just an article to get more people to buy into it as the price pumps. They don't know what's going on. They don't know they just dropped down to 8% market share. People don't know that. They're not paying attention every day. So why not try to get some of the people who've been on the fence, who already maybe donate or sent some money toward Ethereum? They're trying to get more customers, more capital. This makes sense to do at this time, but it's just not a believable headline. So I had to jump on that one. All right, shout out to the Marianas. It looks like stablecoin bill passes in Northern Marianas as House overrides veto. The government of the tiny Pacific island of Tinian could be the first public U.S. entity to launch a stablecoin after the region's legislator overrode a veto of a stablecoin bill. And this is actually super interesting how this is happening. I'll get into why in just a second. I want to kind of get into this article. The Pacific U.S. territory of the Northern Mariana Islands has passed a bill allowing a small constituent island of Tinian to launch a stablecoin, overriding an earlier veto by the territory's governor. The 20-member Northern Marianas Island House voted 14-2 to undo Governor Arnold Palicio's April 11 veto of the bill, which allows the Tinian local government to issue licenses to internet casinos and includes a provision for the Tinian treasurer to issue, manage, and redeem a Tinian stable token. The territory's 9-member Senate has reviewed the bill on May 9th, voting 7-1 and a two-thirds majority to override the veto, which then needed a two-thirds majority in the House to pass. And here you can see here. And holy smokes, this is bringing me a flashback from my past. I'm about to talk about it here. Originally, a 4-member Tinian delegation to the Marianas legislature had unanimously passed the bill to Governor Palacios on March 12th. Looks like it got vetoed, and now this is why they're coming back. So this is the part I want to talk about. Tinian has just over 2,000 residents and a largely tourism-based economy. Its local government, the municipality of Tinian and Aguiguan, is one of the 4 municipalities in the Commonwealth of the Northern Mariana Islands, a U.S. territory in the Pacific Ocean north of Guam. So I used to live in Guam, so I'm familiar. That's why I said this is a blast from the past. Like seeing all these Tinian Congress folks. I mean, these look like this Chamorros. Guam are called Chamorros. They look just like the Chamorros. It look like you got my man's in his Navy outfit over here too. We were wearing blueberries back in the day. I feel like he stole a Navy outfit to wear to Congress. I don't know. But there was definitely a blast from the past to see this. But what's interesting to me is, as it mentioned, out of essentially out of this region here, the Marianas, the Northern Marianas, or the Marianas in general, the largest landmass and the most powerful region over there is Guam. I won't say region, I guess state, even though it's not a state, but essentially the territory. The most popular, the largest, the most money, everything that has to do with that region is based in Guam. Guam is the show. It's the main real deal over there. So TNN, I see what you're doing. Couple things. Some of the local Chamorros to Guam, they are not super friendly to all of their island sisters and brothers, TNN being one, right? Is one of the ones a lot of people kind of point fingers and they're like, hey, a lot of criminals come from here and stuff like that because the way they do it, they hop on boats, they use stars, and they island hop. And a lot of islanders, like on Guam, they're like, we don't want that. We don't want these small ass island people coming over to our island, messing it up, overfishing or doing whatever else, then going back to their island. So there's like inter island beef going on right there. And I bring that up because, again, usually whenever something happens big, like stablecoin regulation or this passing or the Marines going to die, it's always on Guam, not TNN. So that was already like a semi red flag where I was like, okay, it's kind of interesting that TNN is doing a stable coin for 2,000 people and Guam isn't, which is a larger territory. So that was a kind of like a red flag. But when I saw the online gambling and stuff, I was like, oh, I know what they trying to do. And I'm not mad at it, right? What's a good way to spur your local economy if you can't get people to come to this far away remote island? Why not go online with it? They're trying to do internet gambling, internet casinos, and then to have a stable coin to go with it. Oh, you slippery little fish. I see what you're trying to do. Folks, this could make like this could catapult that island. This could catapult that island. It can go from 2,000 people, if it can hold it, to 10,000 people within a few years with the money you receive from online gambling and your own stable coin. Not to mention, you may be evading some big taxes and things of the sort. Now, I don't think they'll go too crazy because, again, that entire region has been taught many lessons about freedom and democracy from America. So I'm pretty sure they'll pay their taxes. But in general, from a business point of view, I do see how they're setting themselves up. So pretty cool to see. Interesting to see it was Tinian and not Guam actually doing it first. And again, even more interesting to see, hey, this is an island with less than 2,000 people. It's still U.S. territory, yes. But how many times have you ever heard anyone in the United States speak of Tinian? Like probably never, right? So again, this kind of makes sense to say to see that they're doing a stable coin is a good place to test a stable coin in the United States market, still US market. Good place to test a stable coin and a good use case to see how it can affect a local or a smaller population, smaller region with the influx of funds and the stable coin side of it itself. So a lot to kind of be watched and researched here if everything goes through and gets deployed. But again, I would be raising the eyebrow because small island, 2,000 people, this is definitely a test ground to see what will happen next. Also, it's going to be interesting to see how Guam responds to this because, again, while they're all supposed to be a big, friendly, happy family of U.S. territories over there, they actually are not a big, happy, friendly family of U.S. territories over there. So we'll see how Guam responds to this and then what happens next. All right, last but not least, a decentralized rental app turns everyday items into shared assets. I don't know what this is about, but it seemed pretty cool. You're always talking about, ride sharing and sharing. Everyone's sharing things these days. That's not the most popular thing. However, when you're sharing old stuff, it doesn't really work the same. And where you're putting things on the blockchain, there's always a space for error there because you're taking a real world asset and putting it on the blockchain. So I was kind of interested to see how this will work. But offering flat fees and token incentives, as it says here, sharing becomes cheaper than buying new with this blockchain based platform. Looks like from camping gear collecting dust after one weekend to impulse purchases worn and once forgotten, closets and garages are filled with evidence of a big problem: overconsumption. Most everyday items spend more time sitting idle than being used. This looks like it is already a sponsor article, but let's keep going. Whatever. They're talking about, okay, we get it. You don't have to give us a whole introduction. Old items. Blockchain powered sharing for sustainability. iVault is a blockchain powered sharing app that merges at the intersection of these values. The app utilizes blockchain infrastructure to make sharing simple, secure, and rewarding. All right. Enables users to rent, lend, and borrow real world items in a peer to peer network that prioritizes transparency and ease of use. With over 80,000 downloads since launch, the app's early traction signals a rising appetite for alternatives to wasteful ownership oriented consumption habits. I got to be honest. I already don't believe in iBot's app or platform because this article that's sponsored that they're not saying is sponsored, even though they said presented by iBot. Hilarious. So okay, so this is sponsored. This is a sponsored article. They didn't put it as being sponsored. My bad, everyone. They're calling it Spotlight now and presented by. But essentially, here's my issue with it. Let's go ahead and break it down. This is how I look at projects. iBot. This is how I look at crypto projects. Let's break it down. The issue is the word soup. Why are you trying to do the whole word soup? Like we get it. This is the place in crypto. And again, shout out to Bitcoin's white paper, 8 pages with the ninth being resources or references. Like you don't need to give me 3 paragraphs to say what you can say in one sentence in crypto. That's why code is superior, code is supreme. It's like you don't even got to tell me anything. Just send me the code. I can read the code and figure out how secure of a project this is. So whenever I see crypto projects try to lull you with buzzwords and word soup and all this other stuff, it's already like, all right, what's the scam here? All right, what's the play? So I'm getting those vibes from iBought already. A B, a lot of stuff like camping gear. Well, I mean, camping gear can be argued, but many things that you could use to rent out from like what they're making it seem like they're like kind of cheap buys, right? Again, I know some camping gear is expensive, but I mean, there's also a lot of camping gear and other types of gear, like a sleeping bag, for example. Like they make them cheap enough. There's different price points. There's definitely some expensive ones, but there's cheap enough sleeping bags to where the question kind of pops up was like, well, why would you rent it instead of just going to go to buy your own, right? Like it's a one-time buy, we get it. And yes, you do put it in a storage closet or garage. But I don't know. Personally, I just don't see an entire marketplace full of folks saying, I want to use your old gear and reuse it here. Like, do you do that with snorkeling gear? That's something else. I got snorkeling gear in my closet for like the last year. I got a wetsuit in my closet for how many years? Like, are you going to come borrow my wetsuit and snorkeling gear? Maybe, but oftentimes once you get to the location of these places, they have that to rent as well. So I'm just not seeing where the app will actually be used at at the top of my head. I'm sure there's some use cases for it. I mean, I don't know. I'm looking around my apartment, like, well, what are some things I would want from a one-time use? Who knows? Like some hiking shoes one day, you put your feet in somebody else's stinky boots. I don't know. But at the heart of iBot's approach is digitized ownership verification, which uses blockchain records to prove authenticity and prevent disputes. Items are categorized by artificial intelligence driven trust tiers. See, this is what I'm talking about. Bronze, silver, and gold that validate item quality and user reliability. You almost had me there. Again, my thing is with real world assets in the blockchain, the biggest issue is them getting on the blockchain because if it's not done perfect and correct, then essentially your entire blockchain could be fraudulent, right? All it takes is for one real world asset to be listed or posted on the blockchain that's a certain way and it not actually be that way in the real world. That whole blockchain could be questioned. So that's already going to be a question there as far as how you can do that correctly. But no worries, no fears. iBot has figured it out. They have artificial intelligence driven trust tiers. What does that mean? Okay, what does that mean? This would be a project for real. I would say, yeah, I wouldn't, hey, if it has a community, I'll take it back. The first thing I would look at for a project like this is does it have a community? Because if it does have a community, regardless of how terrible it sounds, you can make some money off the token or whatever because they're eventually inevitably going to have a token, right? So I can see capital being made there. But if they don't have a burgeoning community and there's not a lot of talk, I wouldn't push my capital toward this play, this iBot play. I'm not really seeing it, but what I will say is, hey, I'd use it. Let me check it out. Let me try it out. I'll download the app and see if it works. But again, this is clearly a sponsored post on Cointelegraph. We'll see how it works out. iBot. But again, the key thing here is at least they're trying to build it on a blockchain. So the race for real world assets to the blockchain is clear and is here. And hey, if their AI could actually their artificial intelligence driven trust tier, if it actually works, then the rest of the market will pick it up and use it as well. So we'll see if that's the case. Other than that, that is the show for the day. iCoin is still alive. I spoke to the iCoin team not too long ago. I need to hit them back up, see if we can get them on here, but they're here as well. Yes, DPen. I know BK Crypto been talking about peak and DPen, so shout out to that. But other than that, that is this show. Smash a like and share, and I'll see you all on Monday with some more crypto news. Hopefully, the market starts to heat up as we get into this summer.